Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the Forex market. So current situation on the currency market is extremely interesting, mostly because we're getting actually some situation in the global finance that world haven't met any time before. So this is for the first time. And there is really big amounts of different opinions concerning inflation, Fed policy, global economy performance, and so on. So as usual, we have prepared a weekly report where we share with you with our argumentation. It's a bit different compared to what market widely expect. In particular speaking, if we talk about the inflation in the United States, there's most common opinion that it should start dropping, just by the monetary efforts, by the slowdown of the production. But in two words speaking, we probably could agree on this subject if we were a decade ago or even longer time ago. But currently, if you will take a look at the statistics from the IMF, it shows the rise of the population and change of the global domestic product. You will see that there is no rising in the production globally. So it means that in the current circumstances, this inflation in general unavoidable. Besides speaking about the purely on domestic situation in the United States, in the economy of the United States, the rope across the Fed's neck is becoming tighter. There are lots of different problems. First, starting from the tactical problems such as negative trade balance, current deficit, budget deficit. So until within the 5-6 months, they have to borrow approximately 2 trillions. Drop of the cash balance of the United States Treasury now stands already below the 100 billions. So it's really very fast. Rising problems in the banking sector, in commercial real estate. There's already some default starts in California. Problems with the retail. So, as you know, maybe you heard that Walmart closing for 14 stores in Texas and in other states across the United States. So really big problems with the retail sales. That's just briefly I have mentioned a few moments. In general, just I can't put everything in the video, so you will need to read the report to get this with more details. And we think that taking it all together, it's more probable that current drop in inflation rate is temporal. We could get the new spiral up. There is also some global political events happening that's actually plays not in favor of the United States dollar. And we think that it might be another spiral where there's some temporal pullback. So it might be another jump to the 10-11 area, for instance, then they pull back to the 9-8-9 level, and so on. So rates remain high. And actually, as the JP Morgan Chief Executive Officer, as some representatives for the Fed, and BlackRock all talk about the rates will stay high for longer. And I think, and we already talked about this, that's in June markets could get strong psychological impact. So it might be the breaking of the minds if and when we think that this definitely will happen, that in June Fed will raise rate again. And that might be a really deadly hit for the stock market, from the cryptocurrency market, when inflation remains high, and they will see that Fed is not stopping with the rate change. It might be crush. Actually, it plays in favor of the Fed because they could grab all liquidity out of the other markets and put them in the treasury, because households will start to sell stocks and put them in the money funds that invest in the short-term treasuries. So that's our view on the tactical, in perspective of the few months. In a very short-term perspective, until the June, probably euro should keep the advantage. Why? Because currently, as I said, common opinion is that Fed will raise rate only in May. This is totally priced in. While in a European Central Bank and in general in Europe, there's a big discussion currently that's, well, actually, rate change for 0.5% is not excluded yet, and probably it also could happen if the status quo will stay. In this case, euro should hold for some advantage in the nearest 2 months until the June Fed meeting in the 14th of the June. So that lets European Union currency to rise slightly higher. We see that it might be 1250, 1270 area, where we have the strong weekly resistance. Then we will see what will happen next. But that is a bit perspective of the few months. Currently, in the next week, what we intend to do. Here you could see that market shows some signs of the wash and rinse. It is still unclear whether this wash and rinse of the previous top, that's potentially bearish pattern, or is just, well, it's just retracement on Friday. That's the same way as it was previously in this upward action. We still yet to find out it. So things that we will consider. First of all, you could see that market oversold stands around 107.87 area. So potentially, probably we could use this level as a floor for the euro performance on the next week. Another important moment is the break-even of the trend. It's 109, approximately 109. So it means that euro will keep this bullish trend until this level currently. So to keep trading euro on long side on a daily chart, we should consider, well, roughly only the nearest tendency support. So market should stay above the 108.60 area. That's approximately will be in an overall tendency, so it will not break anything. If we'll see a deeper downside drop, that will add more bearish signs and, well, could mean a lot of things. But currently we think that, well, it's not big chances that will happen just because of the fundamental background. So on the 4-hour time frame chart, our OP target has not been reached yet, and here's extensions also has not been reached. 111.73 area. So the target that we discussed on Friday, 111.40, 111.70, still stands above. Usually market is not just dropping away the targets, especially when we have no really reasons for that. And with the pullback, we could consider harmonic swings. Market is accurately forming here on the way up. Here was the half of the harmonic swing, this retracement. And if we consider the whole harmonic swing, for instance, if we suggest that this will happen, take a look that it perfectly fits to the 108.58, which is agrees with the daily 108.60. So that's the level why we're considering it actually. Since we have on the top kind of the engulfing pattern, it tells us that on the intraday chart, most probably that we will get some kind of the ABCD performance. So if we take a look at the hourly chart, take a look. Market has dropped precisely to the level that we have specified on Friday. This is confidence support. But with this new detail, I mean engulfing on the daily chart, it means that here we could get some minor pullback, and then most probable that we get another leg down. That's the basic scenario that we intend to consider and follow. So some kind of the ABCD action might happen here, supposedly to the 108.60 area, somewhere to the daily support area. And that's actually what we intend to keep an eye on. Since euro currency stands bullish right now, it's not excluded that it will show immediate upward continuation. But based on this, well, the pace of the collapse here, and because we have still engulfing pattern on daily, it's more chances that we will get some kind of the ABCD pattern. So that's actually what we intend to keep an eye on the euro currency. Read our report. I think you will find it interesting.